Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. Today, my guest is John Cash. John is the CEO of U.S. uranium producer Ur Energy. John, welcome to my show.
Hey, thank you for having me on.
Pleasure is all mine, John. You recently came back from Slovenia where nuclear conference took place. I had Paul Goranson in my show last week and asked him the same question. What was the sentiment what do you see in the terms of sentiment from that conference, and what were your impressions?
Yeah, so I think a couple of things to note here. I think the growing concern about supply and diversity of supply globally. No one's enamored right now with the geopolitics, and it doesn't look like that situation is going to be getting any better. So as a result of that, in our discussions with utilities and other fuel buyers, there seems to be a growing concern about getting a diversity of supply, preferably North American pounds. And so they're very interested in talking to, I'm sure, Cameco and us and Paul Goranson over at Encore, companies that can produce pounds. So we had some very good meetings with utilities, and it looks like it's turning more and more into a seller's market. Especially if you're a North American producer or from a safe jurisdiction, maybe is a better way to say it. So yeah, it's kind of a slow but steady change in attitude that's really founded on the concerns on geopolitics.
Okay. I heard some guests went to visit a nuclear plant, Krško. Did you go there also?
No, I was unable to go to that. I had to head back to Wyoming. We're ramping up production right now, so need to keep my boots on the ground here in Wyoming as much as I can. So unfortunately, I didn't get to go see the plant.
Okay. One question regarding uranium spot price. Where do you see it in the next 6 months?
Well, I don't have a crystal ball,
of course.
so I'll say that first.
Yeah.
I think it really depends on a couple of things. We'll see where the geopolitics go. We'll see where sanctions on Russia go in the U.S. Congress. We'll see what funds are stood up, if any additional funds are well capitalized to be able to bring in more pounds. Zuri, for example, how much are they able to raise? The Kazakh fund and also Sprott. I mean, those are three big ones, and there could be others that form as well that could put some significant pressure on the spot price. So a lot of factors. So in the shorter term, it's a little bit harder to say. As we go out into the midterm, I think we continue to see the price go up fairly significantly based on all of those factors I just mentioned. So we'll see. I think by the end of this year, hopefully we see another $4 or $5 in the spot market, and hopefully the long-term price is trailing along with that, and we see several dollars in the long-term price by the end of the year.
Okay, but what catalyst do you see to do a next heavy lifting for uranium equities?
Uranium prices.
Pretty much the same, or
pretty much the same story. Those are the factors that seem to be driving it. When we're talking about short-term pricing, I hate to talk about the long-term demand for uranium, but that looks strong and improving it, and hopefully we get to talk about that in a little bit. But in the shorter term, it seems like that's being driven largely by geopolitics and some of the funds that are being set up to buy physical pounds of uranium. And so we'll see where those go and how well they get capitalized.
Yeah. Let's discuss company assets and some metrics. We will go through all your projects, but first I want to hear how many offtake agreements company has in place at the moment, and for how many pounds?
Yeah, right now we have 2 long-term offtake agreements in place. We really prefer to sign long-term agreements. It gives us the stability that we want as a company. And so for this calendar year, our contract is for 180,000 pounds. And as I mentioned earlier, we are beginning to produce those pounds now, ramping up flow and head grade. Next year, that contract book goes up to 600,000 pounds, and we've got effectively 6 years of contracts at 600,000 pounds per year. That represents only about half of our production capacity at Lost Creek. So we are actively talking with other buyers to see if we can't continue to fill out that book. We really like a couple of different formats on contracting. We like a base escalated that gives us some pretty good certainty. But we're also more and more interested in market-related pricing on contracts. We feel very safe and secure in that 600,000 pounds. That gives us fantastic revenues to run the company with. Now we're looking for some blue sky here. Let's look and see where the market's going to go. But we'll entertain pretty much any proposal, and we'll see what comes in the near future. But utilities have really come to the table, I would say, in the last 2 or 3 months. Again, looking for that diversity, and we've been a proven producer for a number of years, so they like that certainty.
Okay, those two agreements you have in place, they have a ceiling and floor price in them.
They are fixed price with an escalator, a fixed escalator as well. And that escalator, it's in place to attempt to mimic what we believe inflation will be over the next 6 years. But they are very good, profitable contracts on an all-in basis. And what I mean by that is it not only covers cost of mining and break even there, it covers that. It also covers the cost of corporate overhead, taxes, royalties, capital, replacement cost, all of that. It covers that, and we have a good profit on top of that. So we're very pleased with those contracts.
Yeah. How many inventory do we have at this moment?
Yeah, so we've been able to maintain a good inventory of pounds that we produced at Lost Creek. So they are U.S. Lost Creek pounds, 224,000 pounds in inventory. Our intention is to hold on to those for now, and we'll use those as a backstop to fill our contract for this year and potentially next year as we ramp up. There's always some technical risk to ramp up. We recognize that. So we're going to hang on to those pounds for now. But once we get ramped up, we'll look at selling those pounds into a long-term contract, potentially the spot market, but we'll see where the spot market goes.
Yeah, definitely. Your main two assets are Lost Creek and Shirley Basin, both in Wyoming. Lost Creek is ISR uranium facility. And can you please give us a short overview of that asset? What are you currently doing over there, and what's the plan?
Yeah, no. So certainly our first project and really our flagship property is Lost Creek. As you mentioned, it's in Wyoming. It's an ISR facility. It is completely constructed out. We have the permits in place to operate. We've been operating now for a little over 9 years. And in that time, we've produced about 2.7 million pounds of uranium. For a number of years recently, we've allowed that production rate to slowly decline. We've never turned off flow. We've just not brought any new production online. So as a result of that, our head grade declined. That was very intentional. It wasn't because of any technical problems or permitting problems. It was simply a recognition that the market really didn't support production. So like a lot of other companies globally, we allowed production to slowly decline. But in December of last year, as we were able to sign in some of those long-term contracts, that justified us making the decision to ramp up production. So we announced that this year, and we're ramping up production. Lost Creek, it's notable because of its low cost of production. Back in the earlier days of production, we were able to get down to around $16 a pound C1 cash cost, but around $33 all-in mine site cost. That doesn't include corporate overhead, but it pretty much includes everything else. So our break even at the mine was around 33. So we were a very good low cost producer. I think that was a reflection of two different things. First off, it's a really good ore body. The recovery rates have been exceptionally high for an in situ mine. And so we've enjoyed that. And then we also have some very experienced miners, engineers, and geologists that run the operation. So they've put a lot of pounds in the can at Lost Creek, but also at other mines in Wyoming, Nebraska. And so they know how to do it, and they know how to save money. Those guys have operated in some pretty poor markets. So they know the value of saving a dime here and a nickel there, and they know how to operate. So that's lent itself to very low cost production. So going forward, we don't believe we're going to get back to those cost levels. Inflation has been too significant. We recognize that. But we believe we can still get down to a relatively low cost, maybe $18, $19 a pound C1, maybe 36, 38 all-in mine site. So still pretty good. We can compete with most companies in the world, certainly with any company that is publicly traded. In the Western world, we believe we can compete or beat them. And so right now we're ramping up Header House 2-4, putting it back into production. We've got very good flow, and we're beginning to see breakthrough there. But we've got a ways to go for ramp up. So we'll see how that continues. But our objective this year at Lost Creek is to produce 180,000 pounds to fill that contract. And then going into next year, 2024, jump up to 600,000 pounds a year of production. Of course, we'll adjust that commensurate with our contract book.
Yeah.
So if and when we're able to sign additional sales contracts, it's our intention to ramp that up. The license for Lost Creek allows us to produce 1.2 million pounds from the mine and 2 million pounds from the plant. I'm sorry, 2.2 from the plant. Okay. And that delta between the two, that was very intentional, and it allows us to bring in pounds from other facilities for toll processing. That could be a competitor, or it could be one of our other projects. So that's really kind of what we've got going on at Lost Creek right now. We are in the very final days of permitting an expansion of that project. That's going well. We are frustrated with the regulators, but they suffer from the same issue as everyone else. They're very short on manpower. So yes, that expansion permit has taken way too long, not because of any objection from the public or any technical or environmental problems. It's simply they're short manpower. So we're getting to the very final days of that. We'll be excited to put that one to bed. So yeah, that's a bit of an update from Lost Creek.
Okay. Can you tell me, is there an exploration activity adjacent to your property?
So we have a lot of opportunity at Lost Creek for exploration. If you take a look at the technical report we put out in September of last year, it comments on that in some detail. We've got a lot of redox fronts that we've discovered. We know they're there. They're mineralized. So we've got a lot of opportunity, a lot of acreage that's open to grow and explore. However, we've not done much exploration in the last few years, simply because cash has been very precious. Yes. And so we've been wanting to conserve that and not spend that. We already have a 14-year mine life defined for Lost Creek. So adding more pounds to that story probably is not going to give us much excitement in the market. It's also probably not going to help much with the NPV calculation because we already have a fairly long mine life. But we have done exploration in the past. We've had, in fact, 6 exploration programs in the early days. Every one of those programs, we were successful at bringing more pounds into the resource categories. And the average discovery cost was about 50 cents a pound, so which is excellent. Yeah. And so that's kind of one of our metrics we use when we say, should we go buy pounds via another company or an asset, or should we explore ourselves? Well, we believe we can continue to find pounds at Lost Creek at a very low cost. So that's one of the litmus tests we use for M&A. Yeah. But outside of our boundaries, outside of the 35,000 acres that we have, we do have some competitors out there that are exploring. An Australian competitor, GTI, has been doing some work and having some success. And we have some other companies that have properties in the area that at this time, I don't think they're doing any work, but we do have some neighbors that may do some exploration in the future.
Okay, great answer. Same question for Shirley Basin. What are you doing over there, and what's the plan?
So Shirley Basin is a property we acquired in 2013 from a company that was then called Areva. It's now Orano. It has 8.8 million pounds of measured and indicated resources under NI 43-101. It's a relatively small project. We've always known that. But there are a number of things we really liked about it, and those are reasons why we made the acquisition. Those pounds, the 8.8 million pounds, are very shallow. So that really improves the economics. I mean, we're only drilling 350 feet to get to the mineralization. So that's fantastic. The mineralized body is completely drilled out. So we don't have to spend money on exploration or delineation. We already have all of the mining patterns planned and ready to go. Yeah. The infrastructure, some of that is already there. The power lines into the site, the roads into the site. There's a waste disposal cell that we can utilize. and a couple of really nice buildings to utilize. We have all the geologic data. It's relatively close to town, which is a bit of an oddity for a uranium mine. So for all of those factors, we really liked it. We thought it was, this is a sweetheart little project. We can make some good money on a per pound basis. And so we made that acquisition in 2013. Since then, we've been successful in completing all the major permits with the Bureau of Land Management, uranium recovery program, which now has taken over for the Nuclear Regulatory Commission in the state of Wyoming, and also with LQD and the aquifer exemption. So all of those things are taken care of. We had planned to do some installation of some monitor wells in the spring, but we've had to put that off because of weather. Had a lot of snow this year, but we intend to get back to that later this year after we ramp up out at Lost Creek and we can dedicate some drill rigs to that. So we're kind of in a bit of a hold pattern right now on Shirley Basin because we want to be able to contract out long-term contracts to really justify the production at Shirley. Once those contracts are in place and we've got good line of sight on revenues from them, then we'll more seriously consider building out at Shirley. We are doing some detailed engineering right now on Shirley. We're trying to de-risk it further with regard to timing. There are some supply chain problems that our industry faces, specifically with regard to electrical equipment. We're well aware of that. So we're in the process right now of identifying that electrical equipment, and we'll likely go ahead and make purchases on that here in the coming weeks and months so we can get those in queue and so it doesn't delay construction going forward. When we decide to build out, we can build it out, the facility itself, the plant itself, 6 to 8 months. We can do it very quickly because it'll only be a satellite. We'll ship the resin from Shirley to Lost Creek. And the cost to build out, we're looking at about 30 to 35 million. We'll see what inflation does going forward, but the capital spend on that is pretty negligible. And then once we have that built out, getting it ramped up to full production, we believe we can do that within 2 years, maybe less than that. I don't think it'll take any more than that. And we're licensed there at 1 million pounds a year from the mine and 2 million pounds a year from the plant. So that's a bit of an update from Shirley Basin, and we'll see where pricing goes and where contracting goes. That's really going to dictate the near term.
Great, John. What about your other assets? You have a Lost Soldier project. You have a Lucky MC mine. It's a past producing mine, right?
It is. Yeah. So we don't talk about those a lot. We should probably talk about them more. We typically talk about the two near-term producers, with Lost Creek going into production and Shirley being nearly production ready. But yeah, you're absolutely right. We've got other properties in our portfolio that are in our production pipeline. Lost Soldier is one of those. It's also in the Great Divide Basin, very close to Lost Creek. A little bit too far to pipeline the resource, but it would be a very easy truck drive to build out a small satellite at that property. And the truck drive would be about 10 or 12 miles over to Lost Creek. And so we've got that opportunity there. We've actually done a good bit of baseline data collection on that property. It's been heavily drilled historically, and we have that data. It's got about 4,000 drill holes into the mineralized body.
Do you know how much money was it spent so far on that?
Historically, I couldn't tell you. We've not done a lot of work as far as drilling. We've probably put in less than 100 drill holes ourselves into that property. So those type of holes, we would typically spend about $3,000 or $4,000 per hole. So we've not spent a tremendous amount on it, but we have allocated some funds historically to collect baseline data. Nearby to that is another property called North Hadsel that we've held for a long time. We don't have the historic data for that, unfortunately. We do have a few drill holes that the state of Wyoming has been able to share with us, and we know there's good mineralization with good grade. Historic data shows that there's mineralization there, but it's not in IP 43101 compliant. So we would love to go into that as well. If we're going to produce at Lost Soldier, it would make a lot of sense to produce at North Hadsel at the same time because they are so close to each other. So potentially build a satellite there and haul resin down to Lost Creek. You also mentioned Lucky Mac. That is another project that we acquired from Areva back in 2013. We've not done an NI 43-101 compliant resource on it, but there are some historic resources there, a few million pounds. There is some potential there. It, as far as our portfolio, we would probably consider it our third tier, but there is opportunity there. It would probably require some work with some of our competitors in the area to bring that into production. The quantity to build a satellite just for our pounds probably would not be sufficient. Yeah. And we're always looking for additional growth through M&A.
You have a gold exploration play also.
We do.
Potential.
Yeah, we're not a gold company. But when we made the acquisition with Areva, we got a lot of data that came along with that. Excuse me.
Yeah.
And our geologists were going through those boxes, hundreds and hundreds of boxes of geologic data. And they ran across some assay results on a gold project out in Nevada, and they're good. Surface samples and some trenching samples. We had gold, greater than 90 parts, 90 ppm. Fantastic samples. We thought, this is pretty interesting. We shouldn't ignore it. We're not a gold company. It's not our expertise, but we decided to go out and pick up a land package there. We've done a little bit of work on it, not a lot. We have been able to confirm grab samples with some very good grades, but it's not our priority. Our focus is really uranium, but we'll turn our attention back to that at some point in the future.
But why not spin out or sale of the gold part of the business?
Yeah.
Have you considered that?
Yeah, we've considered it. And I think if somebody came to us and made us a reasonable offer, we would certainly consider it. Because again, it's not our primary interest. It's not our expertise. We have an exceptional staff when it comes to uranium and in particular in situ uranium. But when it comes to gold, we've got some sharp geologists, but that's not their forte. So yeah, if someone made an offer, we would consider it.
Okay. I would like to talk valuation of your assets. It is a more hypothetical question, but for the sake of getting a picture of valuation, I will ask it. If someone would want to build, for example, Lost Creek facilities, how much would it cost today to build it?
Oh, wow. Good question. The processing plant itself, you're probably looking at, in today's dollars, perhaps $80 million to $100 million to build out the plant. The well fields on top of that, you're looking at probably on the order of $12,000 per well. We have a total of 16 header houses built out and 60 wells per header house. So I can do the math real quick, or the listeners can do the math real quick, but yeah, it would not be cheap. It's many, many millions of dollars to build out.
It's close to 200, right?
Yeah, likely so. We've got the benefit of having all of that infrastructure in place. I'm really glad that in today's inflationary cycle, we're not building out Lost Creek. Yeah. That's a double-edged sword because we do need to build out Shirley Basin. Fortunately, that's really shallow, so the wells are cheaper, and we're only going to build out a satellite, so we don't have to build out a big plant. We're only looking at 30 to 35 million to build out the plant and the first mine unit together. So dramatically cheaper. But yeah, inflation is real. I'm glad we have that infrastructure in place. We've also got the ability to recycle header houses, pumps, piping, and move that forward. So we don't have that expense as much going forward since we can recycle a lot of those parts and pieces going, with future header houses.
I have the same question for Shirley Basin. Yeah, you have there the tailings facility, and it is one of the few remaining facilities in the United States that is licensed to receive byproduct waste material. So how much would it cost to build that kind of facility?
Wow. The tailings facilities are generally a result of historic uranium mines and mills. You're absolutely right that there's a very limited number of those in the U.S. We have one that can be used for waste disposal. It's the only one in Wyoming that's being used for waste disposal. Energy Fuels has one at White Mesa. There are one or two other commercial ones in the southern U.S., but it's a very, very limited resource. And it is a resource. We don't see it as a liability.
Definitely.
Any mining activity, whether that be conventional or in situ, they generate waste. And that waste is legally defined as byproduct material under Section 11E2 of the Atomic Energy Act. And so you can't just go to a regular landfill with that waste. It must go to a licensed tailings facility. So we see it as a necessity to have access to one of those facilities. And we are making a little bit of money on it at Shirley Basin. We take waste material from other companies and dispose of it. So we have a little bit of revenue from that. But to get back to your question, if we were going to build that facility out today, it would be in the tens of millions of dollars to build the tailings dam. There would be licensing on top of that. That would be several $1 million, perhaps $2 or $3 million on top of that. So it is a real asset. There is a legal precedent not to have a proliferation of those facilities. So regulators are very hesitant to approve new ones going forward. So we have a unique asset there that's it's required to have.
Yeah, I see. You did the financing in late February for the proceeds of almost 50 million, if I remember correctly, 46, 48 millions. Mm-hmm. My question is, what is the current cash balance of the company, and what do you plan to do with this money?
Yeah, so our last public disclosure was in April, late April. We had $73 million, a little over 73 million. As I mentioned earlier, we've also got 250,000 pounds of inventory that we can convert into cash very quickly if and when we decided to do that. So we're very well cashed up. We surprised a lot of people when we did that raise because we still had a lot of cash in the bank.
Yes.
But there were three things on our mind when we did the raise. Number one was the broader market, not the uranium space, but the broader, the Dow. There's a lot of pressure on that, a lot of geopolitical nonsense going on. We thought, the risk on the market right now is really high. So it looks like now is a good time to do a raise before there's a further collapse in the broader market that could make it very difficult for us to do an equity raise. Turns out we were right in that regard. But also we were making the decision to ramp up production, and we wanted to make sure that we had sufficient capital to get through ramp up. We felt we did, but we wanted to make sure we did. Bankers smell blood in the water. They know that when you're desperate for money, that they can charge you whatever they want for that. And we wanted to beat them to the punch and raise money while the terms were good. And then the third thing was really M&A. People are very familiar with the conversations I've had that we are very interested in M&A. It has to be a quality asset. And I emphasize that every time. We will not buy junk. We are looking for assets that we can put into economic production. So we're
sorry, but you're focused on Wyoming.
That would be our preference.
Okay.
But we have to recognize that when it comes to M&A, you have to consider what's in front of you.
Of course.
And assets in Wyoming may or may not be for sale. You may have to look at something in another state in the Mountain West, or you may have to look in Canada. But certainly our preference would be Wyoming, and beyond that, North America. But it doesn't mean we wouldn't consider things outside the country as long as it's in a friendly jurisdiction and as long as it's a quality asset. But we wanted to raise that money because we were very interested in M&A. And it's much easier to have an M&A discussion when you've got the money in the bank instead of saying, well, we'd like to make a purchase there or make an acquisition, but we don't have the capital to do it. So we have a good war chest now that we can embark on M&A when the assets are right and when the terms are right. We have been, and we will continue to be very disciplined, aggressive, but disciplined when it comes to M&A.
Just to get back on the M&A, you would potentially look for the ISR potential, not the conventional mining, right?
That's right. I mean, I will not completely write off conventional. We are uranium miners first and foremost, but we have to recognize that my team, our company's team of geologists, hydrologists, engineers, our expertise is in situ. So that's really the arena that we would prefer to play in.
That's logical. John, what is the current monthly cash burn for the company?
I'll have to look up the numbers for you. I actually just got a report from our CFO. Not too bad. I want to say we're around $3 million a quarter cash burn, maybe slightly higher than that as we pay off debt. We do still have about $8 million in debt that we owe to the state of Wyoming. The good news on that, it's only 5 3/4 interest rate. State gave us fantastic terms, and our final payment on that will be October of next year. So we're just a little over a year away from having that paid off. But our burn rate right now is a little bit higher than normal because we are ramping up, doing a lot of drilling, a lot of purchasing, because we've been somewhat flat-footed with very minimal production for a while. So it takes some capital to get back up to speed and get going. As we do, as we ramp up, that cash burn should come back down to a more reasonable level.
Okay. I would like to discuss share structure and skin in the game. What is the current share count and how many warrants and options do you have, if you know the data?
Yeah, you bet. Right now, shares outstanding, 265 million shares outstanding. Fully diluted, we're at 303 million outstanding. So that's our structure right now. Share price has been around $1.05 or so. That puts us at a market cap, US dollars, of around 280 million, give or take a little bit, depending on the day. The liquidity, we typically trade over 1 million shares a day. That liquidity has been improving over the last few weeks. I think that's representative of the fact that more and more people are getting involved in the uranium space. There's a lot more interest and people are becoming more educated. So I think that increase in liquidity and shares traded each day is, I don't think that's unique to us. I think that's pretty consistent across the space as more and more people see the opportunity in uranium mining and they're jumping in with investment.
What about skin in the game? Do you know how many shares are held by insiders and how many do you hold personally?
Yep. So about 1.5% of our shares are held by insiders. I've got over 300,000 shares myself. Probably should comment too on other shareholders outside of our insiders. We have a very sophisticated registry. We've got some companies that own our shares that are really big into the uranium space. They track it very carefully and they're recognized as experts. I mean, companies like Sachem Cove, Azarias, Global X, their uranium fund, Sprott is involved. We've got just a fantastic registry, very sophisticated. I think that's a bit unique to our story. I'm not sure that we have any competitors that, at least on the junior side of things, that have such a sophisticated ownership structure.
Okay. John, what would you say for the current market cap of the company? Is it fair valued or do you think that you are undervalued?
I think we're a little bit undervalued. I'm not sure that some of the investors recognize the potential that we have. We tend to be a little bit more on the quiet side. We don't do a lot of marketing and investor relations. So that's something we intend to try to do a better job on going forward to get the story out there more. But I think we're widely recognized as a value play. Our story is very clean. Our royalty burdens are very low. Our reclamation liabilities very low. We've got a tremendous history of good production at low cost, relatively conservatively run. So even though we've been able to sign up some contracts, we still have a lot of blue sky. We've only signed up 50% of our capacity at Lost Creek. We've signed up none of our capacity at Shirley or any of our other pipeline projects. So we've got a lot of room to grow and layer in contracts into a higher priced market And that's our objective going forward now that we've locked in some really good revenue. So yeah, I would say compared to our peers, we're a little bit undervalued. And I would hope that investors would begin to recognize the quality of the story, the value that we bring.
Yeah. Where do you see Ur Energy in 5 years?
Our objective is to really get to that 2 to 4 million pounds of production per year. I'm not so sure we can do that in that time frame, but that's our objective.
Yeah.
There are real economies of scale when it comes to in situ mining. And while we are already a very low cost producer, we believe we can shave a few dollars off of that simply by growing the production portfolio. So that's our objective, get to that 2 to 4 million pounds a year.
Yeah. And tell me, please, a little bit more about the people behind Ur Energy. How many employers do you have, and how many people are in the management of the company?
Yeah, you bet. So I'll start with our executive team. We have 4 executives. Myself as CEO. Steve Hatton is our Chief Operating Officer. Steve has over 30 years of experience with uranium production, including a number of years of production out at Lost Creek. He's been with us now for about 17 years. Our Chief Financial Officer is Roger Smith. He spent his career in the mining industry, including with some of the majors, but he's also been with us for about 17 years. Penny Goplerud is our general counsel, top-notch attorney, and she's been with the company either as a contractor or as an employee for about 17, 18 years. And I've been with the company for 17 years, and I've got about 30 years of experience in the uranium industry. So we have an incredibly experienced executive team. It's small. We're very efficient. Yeah, just a great, solid, small team to advance things. Taking a look at the broader staff, the technical staff, we've got a senior hydrologist, Kevin Shelburne. He's got probably about 35, 40 years of experience with hydrology. Probably about 15 to 20 years of that has been in the uranium space. John Cooper is our senior geologist. He's got about 20 years of experience now in the uranium space, top-notch in situ geologist. And I can go on and on. We've got multiple other geologists, some of them with experience, a few years of experience. We've also brought on a handful of young geologists that have 1 to 5 years of experience in geology with minimal experience in the uranium space. Very recently, in fact, I believe Monday of this week, we brought on a new engineer, formerly worked for one of the big nuclear power companies doing water treatment. And so she's joined our staff. And we've got other people that have got decades of experience. So right now we've got about 70 employees company-wide.
Okay. Is somehow former CEO Jeff Glenda involved in company activities?
Yeah, Jeff is retired, and so no, he's no longer involved with the company. I do get to talk with him from time to time and bend his ear and get a little insights on and some advice on how to handle things. But no, Jeff is retired, and I think enjoying it for now, but don't be surprised if he jumps back in somewhere at some time in the future.
Yeah, he's a uranium veteran. I wouldn't be surprised at all. Okay, John, I have a format in my show for my guests. They are called the B&B questions: bullish, neutral, or bearish. I say some commodity, and you say, are you bullish, are you bearish, or are you neutral on them? 10 quick questions.
Okay.
Are you ready?
Sounds good.
Okay. The first one would be copper.
Neutral in the midterm, bullish in the long term.
Okay. How about lithium?
Bearish.
Bearish. Okay. Oil?
Neutral.
Gold?
Bullish.
Zinc?
Not sure on zinc. I'm not as familiar with that commodity. I'll have to give the same answer as with copper. I'll say neutral in the midterm, but bullish in the long term.
Do you know anything about cobalt?
I'll give you the same answer there as with copper and zinc.
Okay. How about rare earth?
Bullish.
Silver?
Bullish.
US dollar?
Wow, tough question. A lot of geopolitics. I'll say neutral. That could go either way.
And final one, US economic outlook.
I think it is bullish, especially as we look at the long term.
Okay. Tell me, please, how can investors reach out?
Yeah, we are very easy to get a hold of. You can reach me at my email, John, JOHN, .cash, CASH, at ur-energy.com. That information is also on our website at ur-energy.com. So yeah, I'd love to hear from investors, and I try to be responsive so that everyone should feel free to reach out with any follow-up questions.
Great. John, I want to thank you for being my guest. It was a great conversation, and I hope we will catch up sometimes soon again.
All right. Thank you. It's been fun.
Thank you very much.